Welcome back, friends. My name is Deepak More. You are watching my YouTube channel, TheIndianOptions.com. Today we are going to discuss the first video of the record keeping section, and this video is called as Communication from Broker. Now moving to the next slide. Now, communication from brokers. Now usually what happens is you don't have any oral communication with the broker. Never actually there is an oral communication unless you are calling them by phone to put an order. Okay, even that telephone call is recorded for some important purposes, and it is legally required by the brokers to record this kind of conversation, because there should always be an evidence of what you have ordered and whether they have put the proper trade or not. Okay, so there is usually not any discussion that happens which is not on the record. So whenever you call, it will be always recorded, and you have to state your name and your birth date and your email address, registered email address, and then only they are going to take your order. If you are, actually they prefer that you put your own order through the trading terminal they have provided, using the login name and password that they have provided, so that it is more easier that way, right? And there is no miscommunication, and then you are responsible for your own actions. So that's why they prefer it that way, right? The telephone messages are recorded, as I already said. So whenever you call them, you have to tell your birth date, email address, and things like that, and then you can put in an order. And so once this order is put, then during that night or during that day, 3 emails will come to you. Okay, now first email is like order and confirmation email. Now this email is just a very small note of what you had ordered today, and they are confirming that they have received the order and they have executed that order. So this email has only that kind of information. Then the second email that you are going to get, that is going to be the contract note. Now this contract note has more detailed information about what exactly the price was, what exact price the trade got executed, and how much the brokerage was there, and a little bit of that information. And then third email, that if you are having if you are putting a call sale or put sale kind of contract, they are going to send you a margin email. Actually the margin email comes every day, irrespective of you have any open order or not, whether you have any how do we say, call sale or put sale kind of contract or not. If you have call sale and put sale kind of contract, then you will have the value in that email. Otherwise it will be a blank email where it says 0 margin used or something like that. Okay, and then the fourth email is statement of funds. Now this email is actually coming in from it comes in quarterly, and it has more detailed information of how much brokerage, how much tax, how much money was transferred from your bank account to the demat account, and from demat account to again back to your account after you have closed the trade or something, and how much margin was used, and how much GST is paid, and all other taxes. Everything is there in that email, and then we'll discuss in next few slides about them as well. All these mail and files from the broker are just for the confirmation and to resolve any dispute whatsoever. So it is better to forward these emails to CA as it is, and CA can definitely find out the information, and this information will be useful for him when they are filing the taxes for you at margin, right? So that's about this slide. Moving on. Now we'll go into the way we are going to go forward with this video is that I'll show you the mail that we get, each type of mail, and then I'll open the PDF file and I'll explain a little bit about that file as such, and that's how we'll go ahead. Going on to the next slide. Now order and trade confirmation. Now if you can see this is my email screen. So I get this kind of email like every day. Whenever I put an order, then I get this. If I don't put an order, then I don't get email. Now sometimes I don't trade every day. Sometimes I don't trade, so I don't get an email that night. But whenever I trade, I get that email at night. Okay, so in this email, it's not going to be very detail oriented. Let's go to the next slide. So order and trade confirmation sample. Now this is the kind of the email that you get. As you can see that this is a very it's just a text file kind of this thing, and it's very poorly formatted, and you usually don't get proper idea out of it, like what price it was, how much brokerage was used, and what are the taxes and things like that. In this, all you have is like whether it is a new order or you are closing an order, and then it is like which kind of segment it is, derivatives, and then instrument and order type, instrument it is option IDX, and then product it is a margin product, and then set number, I don't know what it is, but then there is some number of the order number, and then exchange order number, and then script, and then whether it is a call type or put type of trade, and then expiry date, what was the expiry date, and then what was the strike price, whether, and then it was buy type, or how much was the quantity, and that's about it. That's it. You have this. So in this email, in this screen, you will just get an information about what you had ordered and what you got executed. So you have to compare yourself with this file about what orders you have put today. If there is any discrepancy or something, you should actually immediately tell the broker that okay, you had ordered this and this is what happened or something. So, and then there would be a dispute, and then something will happen. I have never been into that situation, so I don't know. Usually it is correct. Because they have a lot of processes in place. So if the order is there here, it just means that you have put an order. Okay. So you are usually wrong. They are not wrong most of the times, like 99.9% of the times they would be correct and you would be wrong. So whatever is there in this file would be what it is actually, and they would have some records to prove their point. That's how this mail would get created, right? So this is like this doesn't give much detailed information, but just the order and trade confirmation. That's about it. Moving on to the next slide. Now this is the email that we get for contract notes. Now contract note, it's like more detailed account of the actual prices which you got, and there is always a delta difference at which the order is put in and at which it gets executed. The file is well formatted, easy to understand, and gives more financial information of your contract. Okay, going on to the next slide. Now this is a sample contract note sample. Now at the top you will see the broker's logo is there, and then you'll have contract note, and then what date it was used, and then on the right hand side there is a broker, all details with phone numbers and compliance officer details, etc. Okay, now here there is like your broker, his all permission numbers, his PAN card number, his all that information will be there. Plus there will be a direct phone number of the compliance officer. If there is any dispute, or once you have told the brokers by email or something, if there is any dispute, if nothing is getting done, you have got to tell this compliance officer that such and such thing has happened, and he will look into it basically. So this is really very straightforward, very strict thing, and if you have raised a complaint, they have an obligation that they have got to resolve the complaint to your satisfaction. Otherwise it's major problem for them. Okay, now on the left side you will see that your address and your all other information, your PAN card, your account details will be there, and then in the below table you will have the information like order number, order time, trade number, and then contract descriptions, and then whether it was buy sale, the price, the quantity you have put, the price you have got, and the brokerage, and then after deducting the brokerage, how much was the net price and how much is the total price. So net price, net rate is per security, and then net total is multiplied by that much of quantity. So so this is all the information that you have in the contract note, and by the end of the day you will actually know what was the price that you got, and things like that. Okay, it's very this thing. Then going back to the next screen, this margin requirements mail. Every day you will get, whether you have done in trade or not. So this margin requirement, you'll get an attachment in the email. So whether you have the sale contract or not does not matter, you'll still get this mail every day. If you have sale contracts open, then this statement will reflect how much margin was used today. So margin changes like every day based on the market conditions. Typical volatility plays an important role in increase or decrease of the margins on daily basis. So this margin is calculated on daily basis, and you are supposed to keep a watch on this email as well, because it will tell you how much margin is used. That much money actually gets deducted from your account, and it goes and it sits into the broker's account until the time the contract is open, right? Once you close the contract, the margin is written back with the profit loss, whatever the money was there, after deducting the brokerage and taxes, of course. So we'll go into more sample requirements. So the next slide is margin requirement sample. Again, you have broker name and all the other information there at the top, and on the left side you'll have your details, whatever are details, and then there will be a date, and then there will be like how much margin was used. So today's margin requirement based on your sale type, you can see in that column I've highlighted in red there. So if you don't have any contracts open right now in the sale kind of contract, then this figure will be 0. Which means that no margin was used. This is really very important file, and you actually need to have this margin money in your bank account. If the margin money is not there, then you are going to get a call from the broker to put the money in the margin account, because they are required to do so by the law, or they have the right to close some of the contracts to get the margin. So they will close the contracts without your consent, actually they will inform you that they are closing the contract, but to recover the money they are going to do so. They have all the right to do that. So whenever you have call sale kind of contract, just make sure that you have sufficient margin in your account. Next is like statement of funds. Now this kind of email you get on quarterly basis. It doesn't come on monthly basis, but quarterly basis, and this is very detailed account of your margins, taxes you have paid, and this is the file which you can send it as it is to CA, so that CA can actually calculate all the taxes and GST, how much it was paid and how much tax TDS has been cut against your trades, so that then they can just put whatever information they can put, right? So in the next screen we are explaining about statements of funds sample. Now on this page I am just putting only 1 day's record. So in this you will see that there is like margin payout, margin pay in, and then how much premium was deducted, and then STT, that is security transaction taxes, then there is a stamp duty, there is turnover taxes, SEBI turnover fees, and then brokerage charged, and then GST and CST, CGST and SGST on these records, and then all the money. So if you are doing trading daily, in 3 months I expect this file to be at least 15 to 18 or 20 pages long, and CAs are going to really have very good difficult time in calculating your taxes, and they are going to ask more money for your tax filing actually. Okay, so so all these files that we have discussed so far they are not they are just helpful for resolving some issues or something, but for record keeping purposes all these files are not really that important. But when you go into the trading terminal, there is an option there always to download your trade book. Now this trade book is actually can be downloaded in the Excel format, and then this data is really very important for you to keep the proper track of which contract was open and which are closed. And this file is like very detailed file, and it's very extensive file, because what happens is, like, if you put an order for say 10 lots, okay, now 10 lots doesn't get executed in one flow, right? It gets executed 1 lot, 2 lot, 1 lot, 3 lot, 4 lot, 2 lot, until you get this whole your 10 lots order executed. So one 10 lot order can create like 4 or 5 small orders which get put, and then all that information is, everything is recorded in this trade book, and then this trade book is what you are going to need for your record keeping purposes. And in other videos we are going to explain about how we can take this raw trade file and how we can get some meaningful data out of it for you to understand whether you are having a profit or loss right now, and where you are right now, and what is your target for a year, and where you are against that target. So so this file is going to be really very important, and fortunately or unfortunately they are not sending this file by email. Maybe for security reasons they are not doing that. You are supposed to log in into their terminal and download it from there, and then you can do whatever you want to do with that. We are going to speak in another videos about what we can do. So that's about it for this video, and thank you very much for watching this video, and please subscribe to my YouTube channel. The subscribe button is right here, and thank you very much, and you have a nice day. Bye bye.